Hi, this is Ravi Logaraja from Easy Choice Credit Counseling and Financial Services. Today, I'm going to talk about how to get out of debt without declaring bankruptcy. So we're going to give you some scenarios and we're going to look at it, how it's going to work, and give you some information. So the first thing that we always say in our policy is like, stop making excuse and look for solutions. So always the solution is there, but we had to look for it. So Easy Choice Credit Counseling is helping people to get out of debt without bankruptcy. So what are the things we're going to look at it? One thing, we can cut down the debt up to 80%, and also we don't have to declare bankruptcy, and we also can stop wage garnishments. And also some of the services we can provide, stop interest charges and collection calls, or we can save all the assets. It will be a low monthly payment for all the credit cards, and you can rebuild your credit. So we're going to show what does that mean by rebuild the credit. So here's a scenario. $30,000 in debt. If someone owes $30,000 in credit card, and how it's going to work, and I'm going to show you that. If it is $30,000, you can see on the screen that you have to pay $540, around $540 in interest every month. So the bank is always asked minimum payment of 2.5% of the total owing. So here, $30,000 you are paying $750. Out of $750, $540 goes towards your interest. So only $210 goes towards your capital. So if you are paying $210 a month, when are you going to pay off the complete debt? It's a big question. So let's say we want to pay out in 5 years, 60 months. If you want to pay out in 5 years, you have to pay $793 every month for 60 months. That will be end up in total of $47,589. Let's say you're not able to pay $793. You say, okay, I can only pay $600 a month. It will take 108 months, which is almost 9 years. And the total will be $64,800 in order to pay off the whole thing. So it's a tough part. What is the options available? The one thing is consolidate the loan, which it means is like if you own a house, you can refinance it and pay off the debt. Used to the bank giving a consolidation loans, but not anymore, or it's really tough to get it. The other option is debt management. There's a lot of company out there, they are doing a debt management. What does that mean is like, let's say you have 5 credit cards, you are paying $50 each. You pay them at $250 plus a fee, then they will manage your debt. That's a debt management. The other one is payment arrangement. As I showed you earlier in the screen that you are not able to pay $790. Now you are paying only $600. You can see how much interest you are paying and when are you going to finish paying off. So here's the 2 options that we promote is bankruptcy or the consumer proposal. So these are the things will help you to get out of the debt. So the consumer proposal is not a bankruptcy, but it comes under the Insolvency Act. But it is your control how you're going to pay and how you're going to get out of the debt. So these things, depending on the budget, we will advise which one is better for you, and you will decide what you want to do for it. So here's a scenario. If someone owes $30,000 and the person is a single person and making net $2,000 a month. So if normal scenario is he has to pay a $750 minimum payment and $540 goes towards the interest. Here, when we do the proposal, we can offer $10,000 to the bank. 99% of the time, bank will buy this $10,000. What will be your monthly payment is $170 a month. So as we said at the beginning, it will be a small monthly payment. So instead of paying $750, you will be able to pay $170 a month. And we're going to see a second scenario. Here, someone owes $45,000 and he's making only $2,000 a month, but he owns a home and it has the $30,000 equity. So if this is the case, the bank wants the $30,000 back. So we can offer the bank $30,000. It will be $500 a month for 60 months. So you are not paying the interest, and also you are saving $15,000 on it. If that house is owned by 2 people, maybe the husband and wife, then the one person will get 15,000. We can offer the 15,000 to the bank. That will be end up in $250 a month for 60 months. So in the proposal, obviously your credit is going to go bad, but we're going to see why it is better to do rather than paying full amount. Here's the situation. So if someone owes $30,000 and he wants to buy a house, as I said, if he's paying $800 a month, he will be off the debt in 60 months. And he has to save some money for the down payment. It will take 2 years to save another $20,000. If the person wants to keep good credit and buying the house, it will take 7 years to buy the house. So keeping a good credit and 7 years. Let's say we did the proposal and going to see how it's going to work. So the proposal will be $10,000, and if he's paying $800 a month, the payment will be done in 12 months. Then if he saves another $20,000 in 2 years, he will be able to buy the house in 4-year time. So even though he lost the credit, but he will be able to buy the house in 4 years. If he wants to keep the good credit, he won't be able to buy it until 7 years. So let's say he has a good credit and he wants to buy a car. If it is a $20,000 car, they will give a 0.9% interest. That will end up in paying $340.01 a month. If they did a proposal, obviously interest rate will be higher, let's say 12% interest. Then the monthly payment will be $444.89 a month. So we're going to see, here's a good credit. He's keeping it. He's paying $793.15 a month for the credit, and the car payment will be less, $341. Here's the total payment, $1,134. The biggest question is, do we have enough room in our budget for $1,134? But we really need a car, and we're seeing the scenario how it goes. Let's say he's willing to pay $600, even though it's a lot of interest. He doesn't mind. He's paying $600. The car payment is $341. The total payment will be $941. Let's say they did the proposal with us, and the monthly payment is $170. The car payment obviously is high, $444. The total payment is $614. So here's the thing. If we do the proposal, he's able to keep a car with him with a low monthly payment. If he doesn't do the proposal, he will not be able to keep it. Here's the thing. Is it worth it to do it or not? So if you have any question, you can call us. The other one. So what's the difference between the consumer proposal and bankruptcy? Consumer proposal, we have to offer a generous amount. Usually we offer 30% of it. There's a 2 mandatory counseling sessions. You have to attend it. There's no income and expense statement you have to submit every month, because income expense statement, if they want to see if there's a surplus income. Tax refund will come to you, and if there is 3 payment missing, then the consumer proposal become null and void. Whatever you paid, you lost. The record will stay on the credit for 3 years from the last payment. The biggest difference is, have you declared bankruptcy, you can say no to it. If you do the bankruptcy, it's a set payment. It's depend on the income. Then there's a 2 mandatory counseling sessions. You have to attend it. Every month you have to do income expense statement. The tax will go to trustee, and you can make the payment, discuss with the trustee and make sure the payments are paid before 8 months. The 99% of the time trustee willing to discharge you. The first time discharge will stay on the credit for 6 years. The second time discharge will stay on the credit for 14 years. Here's the thing. Have you declared bankruptcy? You have to say yes to it. So what are the things we can include it into the bankruptcy or the proposal? The first thing, any unsecured loans. Credit card, line of credit, loans, anything we can include it. CRA, income tax, HST, source deductions from the company, we can include it in. And the student loan, if it is over 7 years, you can include it in. What are the things we cannot include? The first thing is secured loans. For example, car, mortgage, those are the ones we cannot include it. Court fine, of course. 407, it's a tricky part. 407 by law, we can include it, but we usually say don't include it because 407, 99% of the time they decline it. Child support and spousal support, you cannot include it in. and the government overpayment. Sometimes government overpaid. These are things will not be included. So I hope I gave a small presentation that what are the options available who has a lot of debt in their life. They can get out of it and they don't have to declare bankruptcy. I show the thing that if someone has $30,000, wants to buy a house, they can, if they want to go and buy the house quickly, the only option would be the proposal. If you have any questions, you can always call us. Our number is 416-754-9999. You can always call us again, 416-754-9999. Thank you.